Good morning and welcome to Tuesday Patriot Radio News Hour. Joe and Jason, and we had the CPI numbers come out. We'll give you all the details. Was it hot? Was it cold? Maybe, just maybe, we had a little Goldilocks, but we'll get to all that in just a minute. 800-951-0592. That is our toll-free number. You know what we do. The physical delivery of wealth insurance. Yeah, that's something, think about it. The FDIC, they say they have insurance. Of course, they don't want to tell you that, hey, when we need to, Jason, we won't have to give it to you. But unlike the FDIC, when you physically hold gold and silver, you physically have that insurance in your pocket, in your purse, in your closet, in your safe, wherever you decide, bury it in your backyard, wherever you decide to put it.
Yeah, that's exactly right. Gold is such a good way to put back what you've all that hard work and effort. You're always pay the bills, buy the food, put the kids through college, all those life things that you're working so hard on. And if you don't put some away, Joe, all those things that you dream of and that you want your life the direction that you want it to go, it could be very difficult. I mean, I know you can buy life insurance, you can buy health insurance. Joe, how many years have you been saying wealth insurance is one of the insurances you need to have in your back pocket?
Yeah, and it's really simple. At least an ounce of gold for every year you've been alive, your wife's been alive, your kids have been alive. If you're a silver guy, and everybody does it different. But for me, 65 ounces of silver equates to an ounce of gold. So that's kind of where I sit. And of course, right now, I think the gold silver ratio is like at 80. But 65 is a number that I like. And Jason, it really is insurance. That's what it is. And the funny part about it is our central bank and our bankers, they want to pretend that you have insurance. You've heard it. Listen, we played the clip for you. You heard them. Hey, should we tell them? Should we? Nah. Because, well, why not? Why not tell you? Well, the answer is pretty simple. Because you may actually not want to leave all your money in the bank if they told you that was going to happen. Of course, they made sure the rich people were protected, but that's what we're here for. All American Gold is the website. And Jason, we've already had a very wild start to Wall Street, and it's just been absolutely crazy. We've had gold up $17 to $20. We had it down $15, up $13, down $4. Now it's up again. The Dow has been up and down. Right now it is down a couple hundred points as the number, Jason, really, and depending on who you listen to, it was in line. A couple of the numbers were maybe a little bit hotter than some people had, but I'll say this, the number was much lower than the whisper number that a lot of people were talking about. And then it came in at 6.4%. 6.4%, the headline. Now, remember, as I told you yesterday, they revised October, November, December higher. So this is another decline month over month. Now, the seventh, I want to say, I think it's the seventh straight monthly decline. Remember, we hit a high of just over 9.1, but the number came in at 6.4. It increased a 0.5% for the month. December, remember December, they revised December's higher. December actually was a negative number. They reversed that to a positive number. And then 6.5 was the December number, Jason. So yet lower. Some people were expecting it to be higher. Some were like, hey, it's not low enough. The core was also lower, but again, higher than some people were hoping for. And then, of course, the bigger number, there's a new number. Here we go again. Super core. Yes. First, we had disinflation. That's a new one. And now super core. Apparently, so the core, you strip out food, you strip out energy. That's the core CPI. Well, apparently now, Jason, yeah, that's not good enough. Let's strip out housing as well. Strip that all out. Strip out shelter, strip out food, strip out energy. And that is what they call the super core. And apparently now that's what they're going to concentrate on.
If they're taking out housing, that means rent must be just skyrocketing. Just have to take that out, Joe, to make it look better. I wonder if rent is just ridiculous. I mean, I haven't rented in a while, but every time I look at it, it looks like the rents are still going up. So that's got to be why they did the super core, Joe, because I'll bet the rents are not slowing down as far as going up. I know some people that renewed their lease recently, and the rent went up $500. So
yeah, I mean, it really is an interesting thing. I guess, you know what a great job. I mean, just think about it. Well, you know what? I don't like the answer to the question. So therefore, I'm going to change the question and give you a different answer that I like better. A's for everybody. 800-951-0592. Patriot Radio News Hour. We'll be back after the break. Eight 800-951-0592. Patriot Radio News Hour. Joe and Jason here. And Jack, whatever you did, it is gone now. Thank you. I had this echo in my ear. It's really hard when you're talking and then you hear yourself in a loop. You know, it's pretty distracting. So thank you, Jack. Way to go, brother. Jason. So 30. I want to say 32 straight months of inflation now. And today they throw out, well, you know, it's coming down slowly. As I said, 7 straight months. We've gone from 9.1 to 6.4. Okay, so think about this. We've raised interest rates from 0. We're somewhere between 4.5 and 4.25. And we still have, let's round up a little bit. We still have 6.5% inflation, Jason. And now they're saying, well, listen, let's just get rid of food. Let's get rid of energy. Let's get rid of shelter. So essentially, here's an idea. Everybody's homeless. Everybody's homeless. You got no money. You got no car, right? And then let's look at inflation. We'll call that the super core. And by the way, Jason, you are correct. They don't like the shelter number anymore. So now, because it used to just be the core, which you got rid of food and energy. Okay, so you still had a place to live. You just didn't have the heat on and your EBT card was out. Now they're like, well, you know what? Hey, you just got evicted. Do we still have inflation? That is now their new favorite number. And Jason, that number is just over 4%.
Yeah, I think this 6.4 number is really bad, Joe. They're lifting the interest rates lower. They're trying to get to the point where they can stop raising. So for this number to essentially be the same as last month, where they were getting a good number that was going down. I mean, part of this number is it's year over year. You know, it's 6.4% over last January, right? And last January was 7.5. So 7.5 to a 6.4. I mean, last month the December number from 21 to 22 was 7.0 to a 6.5 increase over that. So this is bad, Joe. This is, I mean, the next bunch of months, if this number doesn't come down for year over year, because look. In 2022, in January, at 7.5, 7.9, 8.5, 8.3, 8.6, 9.1. if these numbers continue to be in the sixes the next few months, I think the market's going to hate it, and they're going to be raising the rates every single meeting until they can get this thing below 6 at least. I'm surprised, Joe, it wasn't in the fives. There must be a lot of dollars coming back home real quick right now.
Yeah, and again, I think the biggest thing, shelter up almost 8%, rent up 8.5%, medical 3.1, recreation 4.8, new vehicles 5.8, and again, like I said, the number 6.4. So Jason, I think you're right. This they want it to go lower. Obviously, it's not this disinflation story that we've been seeing, because we've been seeing that headline number fall 0.5%, 0.4, 0.3. This one was only 0.1. I mean, it was lower, but only 0.1. And I think now they're talking about, hey, the food and energy may be starting to flatten out, but all the other inflation doesn't seem to maybe be going away.
Yeah, they were shedding about 0.5 point the last 3 months, and then this one just came to a screeching halt. So I mean, Joe, here's the funny thing is I think inflation is going to be coming back, and I thought maybe the end of this year or next year. If they don't jump all over this thing, Joe, and maybe this is what they're going to do. Maybe they raise the rates another 0.25 point every single meeting the rest of this year. Because if this thing doesn't go down, I don't see where they stop raising the rates, Joe. This would be raising the rates for the rest of the year kind of situation if it stays in the middle sixes.
Yeah, and again, this is assuming 0.25 points, right? And this was kind of the big change. They were real quick to go to that 0.25 point. In February. So they only did 1/2 point, then right to a 0.25 point. And the rule of thumb, just so everybody knows, I mean, again, this is the textbooks written by the bankers themselves. So we know we've got to take it with a grain of salt, because wait, the second they don't want that to be the rule, they'll just change the question, right? But you're supposed to have in inflationary times, the Fed's funds rate needs to be higher than the actual rate of inflation. To which Jason is saying, hey, wait a minute, if we're only going to go 0.25 point and we're at almost 6.5%, we got to raise every meeting for the rest of the year, right? Because we've got to get that Fed funds rate to at least 6.5, if not 6 3/4 to 7, somewhere between 6.5 and 7. Now that assumes we got to make some assumptions here. That's assuming that this number stays where it's at, or is this an anomaly? Are we going to get the next reading? You got to remember, now we get one more reading before the next Fed meeting. I think the next CPI number, Jason's going to be really important.
I think so. I think so too, Joe, because they can't keep it here. It can't be here next month. Because once again, if a 6.4 next month is worse than a 6.4 this month. They had 7.9 in February last year. They had 8.5 in March last year. The higher the number is above that number year over year, Joe, is going to be. Come on.
I mean,
they need to get it in the 5s and the 4s, Joe.
Right. Think about this. For the 22nd month in a row, so for almost 2 years now, the cost of living has outpaced any gain in income. This is not a pretty picture. And when we talk about what Jason's talking about, right? Hey, we need to see this number in the 5s, and really, they would love it to see it to get to the 4s. I think if they get it into the 5s, I think they're going to say close enough so they can execute this pause. If it doesn't get into the 5s, then you're absolutely right. Listen, rates got to go higher and quite a bit higher. We'll have to wait and see. We've been waiting. There's more layoff announcements today. Ford, of course, Ford's been hinting at layoffs. They finally started some layoffs. I want to say they started with a little over 3,000 layoffs. But overall, we're going to get retail spending this week, Jason. I expect it to be a hot number. I've seen credit card data come out, and it looks like these credit cards, Jason, continue to get hit.
Yeah, we just passed Christmas, so people were loading those things up big time. So I don't see a big payoff of credit cards at this point. In fact, I think for many people, especially the way that the debt's been stacked up, Joe, it'll for some people that can pay off credit cards, it's going to take them 5-6 months to get some of that Christmas debt off the books, right? So I think you're right. I think your prediction is very true.
Yeah, I just at some point this is not going to go well. Their hope was, and I hate to say it, but listen, this is what they were hoping for. It's what I was hoping for. Hey, let's have a softer number. A lot of people, just so people know today, a lot of people on TV thought the number was going to be higher, that we were going to go above December. That didn't happen. The problem is it was it was almost flat, right? Just down a tenth. And then some of these other numbers, they did not like the core number. Now we got to have super core, right? And all this other stuff. The longer we go without a big slowdown, without really job growth that's non-existent, right? Maybe, something around less than 50,000 jobs. I mean, we just had this report. Everyone's still shaking their heads on the 500,000 we just had. But Jason, the longer we go without this, the higher the rates are going to be, which is going to make the crash even worse. I mean, that's, Robert Kiyosaki was out again telling everyone, buy gold, buy silver, do it now. It's going to get really, really ugly. And I think that the realities are these guys screwed us. They screwed us with transitory. They waited. They let this thing go way too long. And now, Jason, rates are going to be, a lot of people were hoping, hey, a quarter point in March and it's over. I think that's off the table with this number. I really do. Even if we get a number, the next inflation number, let's say it comes in at 6.2. That's still too high. That's still too high, Jason.
Yeah, absolutely. I thought for sure that they were in that motion to get it down where they wanted, and I was expecting it to go down and then pop back up sometime in the future. If they can't even get to go down, Joe, let's just say they struggle through into the summer and it's still in the 6s or like upper 5s, we could see an inflation, and they could raise a quarter point all the way through the summer, and then suddenly the inflation goes up. Can you imagine the problem they would have if they continue to hit quarter points because they can't get it down, and then the inflation goes up after the summer? Can you imagine that situation? Because that's quite frankly could be where they're headed if they don't attack this thing a little harder.
Housing's in trouble. Housing's in trouble with this number. It's already in trouble, but this just says to me that rates may have to go a lot higher than people think. I don't think anybody, including me, was thinking a Fed funds rate in the 6s. And again, I don't want to panic, right? It's one number, but to Jason's point, we've been seeing these steep declines. It was odd on Friday when they came out and said, hey, you know what? Just kidding. Those that disinflation numbers, they were a little hotter than we thought. And why do I get the feeling, Jason, they kind of knew what this number is going to be. They needed to make sure that December's number was still higher than this number. Otherwise, could you imagine? I would be afraid today if that number was 6.6. And you think about it, it's really not that big of a difference, 6.4, 6.6, couple of tenths. I think the market would have been in full freakout mode with that.
What if the number was already 6.6 and this is the fraudulent number? You're the one that brought Supercore on. Maybe they instituted it into this number.
Right.
They came up with the term for a reason, Joe. Maybe the number was already wrong. It's like, well, we're going to have to change that, Joe. I mean, I don't ever trust the number. So this 6.4 number might have been the best they could fake their way to.
I got to tell you, I just think it's hilarious. Super core. We are now measuring inflation as if we are all homeless, right? I mean, think about it, right? I mean, it's just absolutely. And guess what? They were on TV, Jason, talking it up, right? Trying to sell it to everybody. Oh, yeah, of course. Yeah, super core. Yeah, because we want to see, get rid of everything else. Well, what's going on with the service sector inflation?
Did Jim Cramer like Supercore?
Yes. He
Always wonder
likes
what the Wall Street
anything
guys
that
say
comes out
about
of the
these terms.
central bank's mouth, right? Of course, yes.
I always wonder, like when disinflation came out. I ever watch Jim Cramer, but I just wonder what the Wall Street celebrities say when these new terms come out. Do they push them real hard, or do they back away from them? What do they do, Joe?
I mean, do they have a phone call? Hey guys, we got a new buzzword for you. Start using the word super core, right? Start using that. Yeah, it's going to work. It'll be good because it's lower. It's a lower number. Let me tell you right now, if you want to have a super core, it's got $20 gold and it's got silver, right? It's got all of that in it. Patriot Radio News Hour. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Tuesday. The inflation number was in, not as low as I was expecting, not as hot as some others were expecting, but overall, I would say a number Wall Street doesn't like. 800-951-0592. Yesterday we ran the best special of the year. It's not even close, on $20 gold, 1 through 9 at $2,075. If you buy 10 or more, it's $2,050. We had about 120 of them. This was an estate liquidation. This was, something where, you probably want to make sure you've talked to my son, especially when it has to do with inheritance, because this is one that the siblings disagreed as to what the wishes were. The executor wanted to do one thing, the other, so there was a lawsuit, all this stuff. Avoid that. Have your stuff put together. Call Joey, 602-909-9048. So at least you can avoid this, but this is a forced court-ordered liquidation. We sold about half through it yesterday, Jason, so we still got about 60 of these 20s. I don't know what they are. I think they're liberties. There could be saints, whatever it is. 1 through 9 at $2,075, 10 or more, $2,050. And then, of course, we had on the utility silver rolls of quarters, still at $200, rolls of dimes at $100. So, Jason, just really good value today.
Yeah, gold and silver kind of hanging in there. I wouldn't be surprised, Joe, if you see the Dow down 800 at the end of the day. I think that's how bad this is going to be looked at. I don't, you let those guys sit around and think about this for a while, and I think there's going to be a little bit of panicking and selling today. They were all, I think they were expecting some number in the low sixes or upper fives, and that's what I was kind of expecting. It was on that trend. I still think there should be some deflationary situations, but Joe, I mean, I don't know. Who knows all of this stuff, right? And if there's upward inflative pressure that's still happening, then this tapering down of the rates is not going to cut it. They should have went a little harder on it.
Yeah, I think if anything, the mistake they made was February, right? That they should have gone 50 basis points. They didn't. And I find it interesting that after the fact, they raised all of the inflation numbers from the last quarter that got them to say, oh, look, it's slowing down. By the way, Jason, Dow's down 400 points. Gold's down $3. So gold really is doing well. The bond market, craziness here. Housing, the 10-year note at 3.8. Now, that's the highest it's been in a while, still way behind. But here's the thing, the 6-month note yielding over 5%. Jason, this steepening of the yield curve, it's really getting uncomfortable. This is the bond market telling you something's not right here, right? And of course, what does the bond market represent? It represents all the debt markets. And it's saying something isn't right in the debt markets. And Jason, this is the big problem because, listen, this whole thing's been built on debt.
You know, anything could be happening, right, Joe? I mean, who's going to buy the debt that some of these countries are holding and that some of these investors have? I mean, I wouldn't want to buy treasuries right now. I mean, I guess new ones, the interest rates are higher, I guess. But what about the guys that are saddled with these old ones, Joe, that are, near 0%? It makes you wonder why balloons are popping up all over America, and they're saying it's Chinese spy balloons at the time when nobody wants to buy these treasuries, Joe, that are near 0%. And it looks like they're going to raise the rate some more now, right?
Yeah, and again, as we watch all of this, it really is something where the bond market is signaling there's stress to be had here. The higher the rates go, the steeper the inversion gets. And that's something where I'll be honest with you. I could see very easily a Fed funds rate in the 6s and a 10-year note yielding, low 4s. I mean, that's how bad I think the problem really is. And the problem for all of us is when that bubble bursts, what does that look like, right? What does that mean? And of course, we're going to have to start looking at bond prices now, those what I'll call junk bonds. Are we going to start seeing yields in that junk bond category start to stretch out? In other words, I just told you, hey, a 6-month note touched 5% today, right? A 2-year note, 4.6. Right, but a 10-year notes we're at 3.7. We're like, man, wow, 3.7. That's the highest it's been in a while, right? I mean, by the way, yields, bonds actually performed pretty good in January, pretty good because the yields fell. I mean, got down to like 3.35. Of course, guess what? We've been real ugly the last few weeks as these yields go higher. But Jason, that's the thing I'm going to start looking for. Are we going to start seeing the lower end of the bonds, right? The junk bonds, right? The triple Bs, the Cs, right? As they grade them, are we going to start seeing those yields explode higher? In other words, all of a sudden, hey, yeah, if you've got, really good credit, you're Apple. Hey, we'll get you 10 years at 3.7 or 3.8. But if you're Ford, nah, you're going to have to pay 6, 7, 8, right? It's going to be real. And again, I think that's when you're really going to see problems.
Yeah, I think it would be difficult for the average investor to think 10 years down the road as being good right now. So I think those short-term ones are a lot more attractive if that's what you're into, Joe. I can barely see what's going to happen by the end of this year. I mean, we have no idea how bad it's going to be by the end of the year. At some point this year, there's going to be some heavy duty stress. And so that yield curve, Joe, is, I don't see where they have to raise the rates beyond March now. I mean, that's just the way it looks. I mean, the CPI, I guess, could come in real soft in March before they make that decision. We'll see.
Yeah, I agree with you. I think May's back on the table. Without a doubt, May is on the table, and it's more than on the table. Heck, I think it's on the table. Dinner's getting ready to be served, and all of a sudden, are we going to have to start talking about that meeting in late June, early July? Is that on the table? Patriot Radio News Hour. Load up, back it up, fill it up, Get that gold and silver put away. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this, I guess, CPI Tuesday. The word of the day. Man, we seem to get new words now regularly, right? We it started with transitory inflation. That turned out to be a bunch of BS. Then they said disinflation, which apparently, Jason, that was a bunch of BS, right? Because they had to go back and say, October, November, December, that was hotter, and in January, it looks like disinflation kind of stopped. How about super core? Let's go with that. If everybody was homeless, inflation wouldn't be that bad.
Disinflation at least says that inflation is going down. And as I've been doing the 2-year number, the 2-year number for December is 13.5. The 2-year for January is 13.9. It's actually inflationary, Joe.
Yeah, it actually is when, and Jason very astutely there says, hey, wait a minute. Let's just add the last 2 years together and see what we shake out at. And it's something where you're talking about they're owning up to, hey, we've taken $100 and essentially you now have to have $114 to buy what $100 used to buy. Or, yep, hey, your $100 worth $86. Now that's what they're willing to admit to. Nobody actually believes that that's what the inflation number was. I mean, Jason, we're probably looking at a situation where over the last 2 years, you lost 25% of your purchasing power.
That's right.
Yep. This is really what they've done.
It's there's only two things. The Fed talks about the tools in their toolbox, but really the two powers they have is printing the money and setting the interest rates. And those two things are very powerful. You can do a lot of wealth building for yourself and your big fat buddies, the big fat pockets, and you can do a lot of damage to markets so that you can scoop up cheap assets. So Joe, this is why the CPI to me has been a number I've been watching closer since the inflation, because this is one of the things that indicates what they're going to do, Joe. And right now the interest rates are going up and they're going to keep going up, and it's going to be very painful for people with credit cards and car loans and home equity line of credits and all that stuff, Joe. Very painful.
Yeah, that's going to be a situation where, especially on the credit card front, this was not a good number for that. Rates are already at all-time highs. They're going to go higher, and this just puts a lot of pressure, right? Car payments, right? You need a car. Well, Manheim just said used car prices just jumped again. Right? All of a sudden reversing some decline, but the payment, right? We talk housing. It's the same problem with housing. Listen, you could afford a $1.4 million home with a 3% interest rate. People could afford that. And you're probably talking about a payment in the $3,000, $3,500 range. Well, guess what? At 6%, and now it's 6.5%, but at 6%, you're talking about a payment of like $6,000, right? Hey, I went from $3,500 to $4,000. It's now $6,000. Jason, that's not affordable. I just saw where they're saying for the average person, the way the old economic rule of thumb about how much you should spend on housing, shelter. The old rule of thumb was, hey, you want to keep that number to around 30% of your income. Well, okay, to afford a $650,000 home. Notice I didn't say $1.5 million. You know what you need to make to keep that in line? I don't know, like $300,000. right? $300,000. Jason, we got a problem, man. Simple. It's just math.
Imagine if in 2019 you opened up a home equity line of credit, which is usually a floating rate, kind of like a credit card. And you had those 0%, you had the repo market, and then you had coronavirus blow in there. And okay, so you're out of work for a while, and hey, let's just get it all into one payment. Let's just throw it on that home equity line of credit. It's got like a 10-year payoff sort of situation. And you're like, okay, this is good. It's 4%, maybe 5%, depending on your credit. And this is doable. This made so you can float through the coronavirus emergency. And now here you are in 2023, and you're paying 10%, 9.5%, or depending on your credit, maybe the upper 8s, lower 9s. Joe, that's getting close to doubling your payment. I mean, can you imagine if you opened up your home equity line of credit and threw a bunch of debt on there, Joe, thinking everything's going to be fine, and now you've doubled your interest rates and the payments close to doubling? How that bankrupts people.
And a lot of these people that have bought homes this year, and I get it. You need a place to live, and you've been trained to, you got to own your home, and that's the definition of success in America. A lot of them, Jason, did it with one of those adjustable rate mortgages. Because they're being told, oh, don't worry. The Fed's going to quit soon and go back to zero, right? This is the whole Wall Street mantra. That's not happening.
Yeah, I don't know. I mean, I don't sell. I'm not a broker, so I'm not in that market. But yeah, I mean, one of the ways you got to sell on these higher rates is that, hey, it's going to come down, and there's going to be a lot of people mad at those brokers for selling them alone that way.
U.S. $20 gold pieces 1 through 9, 2075, 10 or more, 2050, 800-951-0592. Final segment coming up. $800-951-0592. Joe and Jason, Patriot Radio News Hour, wrapping up a Tuesday here. Inflation is the word of the day. U.S. $20 gold pieces 1 through 9, 2075, 10 or more, 2050. Gold's down $2 right now, $18.49. It's gold's been, well, let's use TV gold, 1860 on TV gold. It's been as high as 1880 today. Very interesting, especially with the Dow being down this big. Actually, a pretty strong day here for gold. Rolls of silver quarters, 40 silver quarters at 200. Rolls of silver dimes, that's 50 silver dimes at $100. Just call 800-951-0592. And let's not forget our friends at Y-Refi, right? Hey, look at the Dow hemorrhaging today. Jason's talking about, hey, I wouldn't be surprised if the Dow's down 1,000 with a big sell-off. I hope not. But if you don't want to play that game, check out our friends at Y-Refi, up to 10.25% return, not tied to Wall Street, not tied to interest rates. Doesn't care about CPI, doesn't care about core CPI. Hell, it doesn't care about super core CPI. Invest, yrefi.com. That's the word invest, the letter Y, REFY.com, or call them 888-YREFI24. And Jason, this was not the day I was expecting. I was expecting a lower number than 6.4. I was thinking 6.3, 6.2, which would have been a huge case. You probably would have saw the Dow up 400 or 500 points with that number.
I think you're right. And I'm just looking at some of these market news. It looks like Boeing had some good news with a contract. So that'll probably keep it from really going bad today. Boeing being a huge player on the market. So they got, it was an Air India purchases. So when you build a whole bunch of airplanes, I guess that can a few investors going to put their money somewhere, I guess. But down 400 points, Joe, and we'll see this next week. These next few weeks are going to be interesting because it's we're halfway through February. We got 2 weeks, and then this month is over. This is the 14th, Joe. We're done. We're half done with this month.
Where did this month
March
go?
will fast approach, and we'll see. I mean, I think it's going to be a long couple of weeks before they get the next CPI and the next announcement on the rate hike. And Joey, this. We'll see. It's not really. Sometimes, usually the markets like to react, or at least that's how we've been programmed to think. It just reacts to this information. But sometimes, day after day goes by, and you're looking at those numbers. It takes a long time to get to the next one, and sometimes people start to panic after the fact, Joe. Sometimes people start selling off. You know what? I was thinking it was going to be okay, but let's just start selling some stuff, right, Joe? And we could see some market weakness in the next couple of weeks.
Yeah, so right now the Dow is down 383 points. The S&P is down 37. The Nasdaq's down 100. That 10-year note 379 on the 10-year note. Surprisingly, though, the dollar's weaker today. So this is kind of that's unusual, right? Inflation's hotter. You would think. Kind of almost the market's like, hey, wait a minute, if your rates are going to have to go that high, then maybe the dollar ain't that strong. It's a lot of the head scratching today.
Yeah, the dollar's not going to stay there forever, Joe. It's just been stronger against other currencies. Let's face it. If the other currencies ever have any strength, then the dollar will come down. But versus gold, all of the currencies are down.
$20 gold. $20 gold. $20 gold. 800-951-0592. Jason and I coming right back with the half empty cup.